Good morning and welcome to Stock Market Today. It's Monday, February 3rd, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities were lower in Friday's trading, ending near the worst levels of the day as fears of coronavirus persist throughout the marketplace. Consumer discretionary outperformed thanks to a strong post-earnings move from Amazon. Energy, tech, and industrials underperformed. Treasuries were stronger across the curve, which steepened. The 30-year yield actually traded below 2% at one point on Friday. The dollar was weaker on the major crosses. Gold ended down 10 basis points, and WTI crude was down 1.1%, though it did finish off the worst levels of the session. As we get to the desk this morning, futures are up 40 basis points after U.S. equities came under pressure last week, suffered back-to-back 1% plus declines for the first time since late August. Asian markets were mostly lower overnight. Shanghai, they returned from the one-week holiday and lost nearly 8% on the day. It was the biggest decline in more than 4 years. European markets are mostly higher. Treasuries are weaker across the curve. The dollar is stronger on the major crosses. Sterling weakness, the big story in Forex. Gold was down 20 basis points, and WTI crude is up 20 basis points to get us going on Monday morning. As we look at the structure of the S&P 500, we continue to test the near-term support zone. Now, we've been highlighting 3,200 to 3,250 as support for some time now, and we have been testing it roughly for the past week. Resistance is in the 3,300 to 3,330 range. RSI is so far holding bullish ranges, right? What we look for on pullbacks within an uptrend is for the RSI, number one, to not become oversold, and then number two, to hold between this 40 and 50 area, similar to what we did towards the December timeframe last year, and then again earlier this year, and once again now. So far, that remains the case. The RSI is holding bullish ranges for now, and as I said, futures are trading higher here this morning. At the same time, Chaikin money flow remains bullish. So headlines aside, strictly speaking, from a process standpoint, what do we have? Just looking at price, we have a pullback into the near-term support zone that we've been highlighting, while at the same time, RSI is holding in bullish ranges and money flow remains bullish, right? So headlines aside, this looks like an area where we want to start to think about looking for opportunities in the marketplace. Focus on the leading stocks in leading areas of the market that have become oversold, particularly if they're oversold while Chaikin money flow has remained bullish. I think you might see some opportunities, especially if you kind of focus your work in the leading areas of the market from a sector and industry standpoint. That is our process. That does remain the case. We're trying to keep it purely price and evidence driven while being mindful of managing risk, right? We've highlighted this support zone. This is the area which, if broken, it makes sense to start to reevaluate that view. Let's hit our market in a minute now. What are we writing about in our note today? Well, coronavirus pushed the S&P 500 to a loss for the month of January. Small caps underperformance continues as investors take a more risk-off stance. The flight to safety has lent a bid to Treasuries, sending yields lower. We've been talking about that for the past few days. Commodities fall on global growth concerns, and futures do point to a higher open here today. Turning our attention now to the power bars for the major indices, right? It was a rough day on Friday across the board. The Dow lost over 2%. Power bar ratio still bullish, however, 7 to 6. S&P 500 still with a bullish ratio as well, 106 to 103 bulls to bears after a 1.8% pullback on Friday. So obviously some deterioration in the power bars. NASDAQ down 1.6%, 26 bulls to 11 bears there. Small caps underperform, 411 to 322. Big turn of events in the power bar ratio for small caps over the past week. Bonds rallied in a flight to safety, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, but the major markets across the board are mixed. Let's hit our stock of the day now on semiconductor. ON is the ticker symbol there Semis really came under pressure on Friday. On closed at 23.15, down 3.3%, but still has a very bullish Chaikin power gauge rating due to very positive expert activity and attractive financial metrics. So when we take the 20 factors, 5 in each of these 4 categories, we come out with our very bullish power gauge rating. Strong trend above this rising long-term trend line, and a strong industry group. Semiconductors, despite coming under pressure on Friday, do remain a leading area of the market. As we take a look at the structure of ON now, reading the chart from the bottom up, this ribbon tells us where the rating is and has been over the past year. You can see this green, we're on that very bullish rating. And the stock is outperforming the market. So market and model are in agreement. ON is oversold with this pullback of late. Now, money flow has dipped into bearish territory as the stock has pulled back, but the weight of the evidence does actually support taking a look at ON Semiconductor here. For strictly from a technical standpoint, you can see we have this support zone in the $22 to $23 range, so a clear risk reward to shoot against if you're trading purely from a technical perspective, right? Support, if it breaks at $22, that would be the price that tells you you're wrong. But ON Semiconductor does look compelling to me on this pullback, as the weight of the evidence supports doing more work here and potentially getting involved on the long side. Take a look at ticker symbol ON today as a potential bullish idea for the portfolio. Turning now to our sector tracker, the movement of the major sectors over the last 5 days, you can certainly see, everything save for utilities was lower over the past week of trading, right? So lower rates helps the utilities, as well as a flight to safety. So utilities up 90 basis points or so over the past 5 days of trading. Strong day on Friday for discretionary, as we said, on the heels of the Amazon earnings report, pushes that group towards the top of the list. Staples are a defensive group. Financials, kind of interesting to see them here towards the top of the list as rates have moved lower. Financials have come under pressure, but maybe some signs of stabilization. We'll have to give that a little bit more time to play out. Real estate, tech, industrials, and comms are middle of the road. Healthcare, I would expect that group to be volatile, especially this week. We have a big week from the presidential election standpoint as it relates to the Democrat side of the ticket, depending on how certain candidates are doing in the polls. That could have a big impact on healthcare. Would expect volatility to continue there. And then our growth areas of the market, right? The areas of the market levered to global growth, obviously coming under pressure as growth fears have picked up with coronavirus, energy, and materials. Our bottom 2 groups over the past 5 days, I think we've kind of made our point clear as it relates to the energy complex over the past couple of weeks and really a few months, right? Just remains an underperformer, and we want to continue to avoid that group. Now, our industry in focus today actually comes out of the financials. It's capital market services, which over the past 6 months has outperformed the S&P 500 by 3.34%. The ETF that you can look at to track that group is KCE. Power bar ratio is very bullish, and that measures future potential. We have 30 bullish or very bullish stocks there for only 3 bearish or very bearish stocks. Earns it a rank of number 2 of 21 subsectors, having moved up 3 slots over the past week of trading. Some of the indicative names there: Stifel Financial, SF, State Street Corporation, STT, and Legg Mason, LM. All have very bullish Chaikin power gauge ratings. We're going to change it up here a bit. Instead of looking at the fund, let's look at one of these stocks, because I think Stifel actually looks compelling here. Ticker SF has a very bullish Chaikin power gauge rating. Strong trend above this rising long-term trend line, which has acted as support to pullbacks of late, and it's in a strong industry group, right? We just touched on cap market services. Interesting to me, right? The intensity of outperformance picking up following a better than expected earnings report. Notice that the overbought, oversold indicator is beginning to move higher after failing to reach an oversold condition. Chaikin money flow, intensely bullish. Very bullish stock, outperforming the market, near oversold with bullish money flow. That to me looks like the setup that we want to potentially take advantage of. So another name that you should think about here as markets have pulled back but are still holding support is Stifel Financial, ticker symbol SF. Let's look at what's trending now. Friday's S&P 500 movers and shakers, our gainers and losers. Amazon, big earnings report, sent that stock higher by 7.38%. Colgate, CL, up 6.2% following their earnings report. IBM, CEO transition, sent that stock higher by 5%. Charter reports earnings higher by nearly 5%, and Eastman up by 2.5% following their earnings report. Remember, we're still in the heart of earnings season, right? Everybody's been focused on the macro and on the potential impacts of coronavirus. But we still have a heavy earnings calendar, and that very much is playing out at the individual stock level. On the loser side of the board, BR down nearly 8% following their report. LyondellBasell down 6.7%. Earnings related. CE, same thing. Earnings related down 6%. Edwards down 6% following their earnings report. And Corvo reported earnings on Thursday, or Wednesday night, actually. That stock lower by 5.3% as the semiconductor stocks came under pressure on Friday. Corvo, though, still with a very bullish power gauge rating at Chaikin Analytics, so maybe an area of opportunity there. Let's touch on the charts now, right? On Mondays, we look across asset classes. We spent a big chunk of this show so far talking about the equity markets, but let's look at what's happening with yields. 10-year yield plunging lower in a flight to safety, as well as concerns about global growth. Here's the TNX. After that rally that started in late August, early September, that kind of failed near the 200-day moving average, near resistance at the 2% level, we've now turned lower, below the 50-day moving average, which is now turning lower as well. Broken this uptrend line. Notice that on the rally, momentum was making a series of lower highs and never became overbought, and has now quickly moved to an oversold position. So it seems the downside momentum remains in place, confirming the trend lower. Now we have to see what happens as the yields push towards this 1.4, 1.45% level. That may be support here near the recent lows. What we want to figure out is continue to monitor the yields, because of the impact that it has on specific areas of the equity market, namely your bond proxy REITs and utilities, which have been strong of late, as well as financials, which have been weak of late on a relative basis. At the same time, as yields move lower, that tends to have a negative impact on the relative performance of small caps. Remember, that was a big theme throughout 2019, and small caps have once again started to underperform to start 2020 as yields have moved lower. So what's happening in the Treasury market certainly can have an impact on what we watch within the equity markets. Now, commodities have come under pressure as global growth fears have intensified, right? One of the theses out there is that coronavirus could lead to a slowdown in global growth, right? Commodities obviously highly levered to global growth. They've come under pressure to start the new year, but now we are testing support at the late summer, early fall lows as the RSI have become oversold. So commodities are oversold at support. From an asset class level, remain a big underperformer relative to equities. So just something to keep in mind as you're thinking about bigger picture asset class allocations. But if commodities are going to rally on an absolute basis and try to get back towards this now declining 200-day moving average, this would be the spot from which to do it. We have clearly defined support level for DBC, the Invesco DB Commodity Index Tracking Fund, here in the 1440 to 1450 area. So, and we are oversold. So if we are going to get some sort of oversold bounce, this would be a great spot for that bounce to start. Now you can see on Friday, we tested the top end of this support zone and then rallied a bit to close towards the middle of the range after that hammer candle on Thursday. For those of you who look at candlestick charting, Thursday's action is what's known as a candle. Friday's action above support is what's known as a doji. Finally, we are actually highlighting Comm Services in our note today. We've been getting more and more excited about this group. XLC, the Comm Services ETF, has a very bullish ETF power gauge rating. 6 bullish or very bullish stocks, 1 bearish or very bearish stock. You can see consolidation through a large part of 2019, breakout. That consolidation and breakout level now becomes support above the rising 200-day moving average. RSI so far holding bullish ranges, and at the same time, after breaking a relative downtrend line against the SPY, we broke out, or XLC broke out. We've now pulled back to test this downtrend line, and again, if we're going to rally from an absolute and relative basis, this would be the spot. Take us for a spin free 14-day trial. I will be back here tomorrow.